Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. So, have you made your New Year's resolutions yet? You know, you still have a little time. You can get those in under the wire. And if you're still kind of searching for a resolution, I've got one that might be good for some of you folks out there. Make a resolution not to panic every time the price of gold and silver drop. So you probably noticed that, like last week, this show is a day early, recording on Tuesday instead of on Wednesday. This is not a permanent schedule change. I just shifted for the holiday season since Christmas Eve and New Year's Eve were both on Wednesday. I wanted to take those days off, so I'm shifting this back just a day, and next week we'll be back in our normal slot on Wednesday. By the way, thank you so much for listening to the show. I know I say this every week. I really do appreciate it. It means a lot to me. I know there's a lot of stuff out there that you can listen to, a lot of things vying for your attention in your ears, so to speak. And it means a lot to me that you spend a little bit of time with me each week. If you would, do me a huge favor. Go out there, share these episodes on your own social media posts. Give us those likes. I mean, assuming you like what's going on here. Give us the likes. Write those reviews wherever you listen to this podcast, whatever your social or whatever your podcasting platform is. Those types of things really help grow the show. They feed the algorithms, so to speak, and would really like to see this show grow more in 2026, because I think it's a pretty good show. I mean, I'm biased, but hey, I mean, you're listening. It must not be too bad, right? So anyway, I want to talk a little bit about the big silver sell-off that we had yesterday, and gold as well. On Friday, though, we have to kind of set this up. Last week, Friday, silver surged to over $80 an ounce. Yep, you heard that right, $80. And then on Monday, it dropped about 9% and closed yesterday down around $72. And as I mentioned, gold also tanked yesterday. It dropped from just above $4,500 an ounce all the way through the $4,400 support level and closed down around $3,300. So both metals, significant sell-off yesterday. And let me tell you, people freaked. I know this because I saw the social media comments on some of the articles that I posted yesterday. Got a couple of emails and even a couple of text messages. People, oh, what's going on? Why is gold and silver selling off? I think a lot of people who follow precious metals, who are invested in precious metals, have been browbeaten into this perpetual sense of pessimism. And it's understandable because the mainstream financial media has this perpetual bearishness when it comes to precious metals. And you know, we could do a whole show talking about why that is, but it is a reality. And, you know, folks that are really into gold and silver, people like me, are usually derisively called gold bugs or, preppers or whatever. So there's that negative energy that's always out there. And so, yeah, when things start even looking slightly bad, everybody freaks. And it was a significant sell-off, I mean, no doubt, but look at the bigger picture. Just 3 months ago, silver was below $50, and naysayers were out there saying it would never break out above that resistance level. And go back a year ago, silver was under $30. So, and I'm not sure that the negativity is really warranted, at least not yet. Now, keep in mind, corrections, even big corrections, are normal and healthy in a bull market. The important thing is, when you are in a bull market, is to keep your eyes on the fundamentals. So when you see gold and silver start selling off, you have to ask yourself some questions. Did anything significant change on Monday to drive silver down? right? Did somebody suddenly create a bunch of silver out of thin air? Or did the government suddenly end its inflationary policies? Or did the dollar suddenly become a trusted store of value? If you answer no to these questions, if there's no fundamental shift in the dynamics, it was probably just a correction. And in fact, as I was prepping for the show this morning, gold was back above that $4,400 support, and silver was knocking on the door of $77. So it kind of looks like Asian and European markets took advantage of that sell-off to buy the dip. Now, interestingly, as I was working on the show and the U.S. market opened, both silver and gold gave up some of those overnight gains. And what this tells me is that whatever bearishness is existing around gold and silver, it's primarily here in the United States. And, we could get into speculation if there are players that are trying to suppress the price. I don't like to try to get into that because, quite frankly, it is all speculation. But there are some things that we can definitely wrap our heads around. I'm going to get into those things here in a minute. I want to talk a bit about what is going on in the silver market. The Winter Olympics are coming up this year. I love the Winter Olympics, especially the hockey, because, I'm a hockey guy. But did you know that the gold medals that are awarded during the Olympics are mostly made out of silver? They just have a gold coating on them. They're primarily a silver medal. And this seems fitting for this year because really silver has taken the gold in 2025. Silver has more than doubled in price. Now, don't get me wrong. Gold has done pretty darn well too, but silver has outperformed this past year. And when silver eclipsed $80 last week, several people messaged me and asked me, why is it going up so fast? What do you think is going on in the silver market? And really, there's a lot of factors that I think are combining to create a perfect storm for silver. And a lot of these factors also apply to the gold market as well. But, I'm talking about things like dollar weakness, persistent inflation. For silver, we have resilient industrial demand. We have growing investor interest in silver as the price is going up. We have momentum spillover from the gold market. As gold is rising, it tends to take silver with it. We have some policy changes that have happened this year. I think one of the most significant was the United States adding silver to its list of critical minerals, and there's some ramifications around that. I will put an article in the show notes page over at moneymetals.com/news where you can read about that policy change. So you've got all of these things that are kind of working together. However, there is one fundamental that's really dominating the silver market, and that's the very simple fact that there isn't enough silver. And I've talked about this on the show before, but it is very important to keep emphasizing this point because no matter what else is going on around and swirling around in the silver market, this is a fundamental that you can't get around. There's not enough metal. And this has evolved into a very significant silver squeeze. And we actually saw the first round of this silver squeeze back in October. And that pushed the price of silver over $50 for the first time and helped kick off the momentum that we've seen continue over the last couple of months. Problems actually started much earlier this year when tariff worries incentivized the movement of silver out of London vaults over to the United States. So it created an arbitrage opportunity is what they call it, where you could actually make money by physically moving silver out of London to the U.S. Because of the way the pricing structures were, because we had this kind of worry about these tariffs. And then we had an explosion in Indian silver demand this autumn, and that was kind of the straw that broke the camel's back. Now, initially, Indian buyers were primarily sourcing silver from Hong Kong, but they reportedly shifted more toward London during the Chinese Gold Week holiday, which is the first week of October. And that was a problem because the London vaults were already tapped out. Remember, we had this big movement of metal out of London to New York in the spring. And some of that had come back, but a lot of it had not. So London vaults were already empty. And then we had this surge in Indian demand, and it really put a lot of pressure on inventories in London. According to Bloomberg, the amount of free float silver, that's the silver that's available, to be traded, dropped from a high of 850 million ounces to just 200 million ounces. That was a 75% decline. And Metals Focus actually estimates that the available metal fell closer to 150 million ounces. This precipitated what is known as a short squeeze. Now, a short occurs when somebody sells a silver contract today, committing to deliver silver at a set price in the future with the expectation of a falling market price. So they're going to sell that future contract and they're guessing that the price is going to go down. If it does, well, the investor can sell the contract and then pocket a gain. But if the investor guesses wrong and the price goes up, well, the investor's going to suffer a loss. And if nobody's going to buy that contract, well, he's obligated to deliver the silver. So this is what happened in London. We had a lot of silver shorts, and the short squeeze caused liquidity in London to virtually dry up. And this drove the London benchmark prices higher at a very rapid pace. And it caused a price gap between New York and London. The London spot price recently shot to a $3 premium over New York futures. The last time we saw a premium like that was during the Hunt Brothers squeeze. Meanwhile, the cost to borrow silver overnight rose to well over 100% on an annualized basis. So, huge turmoil in the silver market. This was back in October, and this is what pushed the price over $50 an ounce for the first time. So eventually, the market did its thing, and metals did flow back into London. That eased the squeeze. We actually saw a bit of a correction in late October and into November, but it didn't fix the market. Right? The root of the problem is simple. There isn't enough metal to meet the demand. While shuffling silver between London, New York, and India took the immediate pressure off the market, it didn't magically create new silver, right? And this is key. Silver demand has outstripped supply for 4 straight years. The structural market deficit was 148.9 million ounces last year. So in simplest terms, that means that the world used 148.9 million more ounces of silver than were mined or brought into the market through recycling. So that drove a 4-year market shortfall to 678 million ounces. That's the equivalent of 10 months of mining supply in 2024. The Silver Institute projects a 5th straight supply deficit this year, and that will drive the cumulative deficit to over 1 year's worth of mining. So over the last 5 years, we've used more silver than has been mined in the last 6. So these persistent supply shortfalls have taken their toll on above ground stocks. According to the Economic Times of India, inventories across COMEX, London vaults, and Shanghai have steadily declined over recent years, reinforcing concerns about tightening physical availability. So this displacement of metal that we saw between New York and London is in the context of there just isn't enough metal out there, right? London Bullion Market Association vaults have lost around 40% of their holdings over the last 5 years, while COMEX registered inventories in the U.S. are down nearly 70%. Meanwhile, Shanghai inventories have fallen to their lowest level in decades. So today, we're once again seeing increasing signs of inventory problems in London. So kind of fixed that, but now we're seeing these problems again because we're still dealing with significant demand for physical silver. The premium between the London physical price and the New York futures price is almost back to $1. At least it was yesterday. I didn't look at it this morning, but yesterday it was right at $1, which is a very wide spread. Meanwhile, the spread between the one-year silver swap rates and U.S. interest rates has plummeted to minus 7.18%. So what this means is the implied financing rate on a one-year silver swap minus a comparable U.S. interest rate for the same maturity. And they often use one-year Treasury yields or one-year SOFR, LIBOR type funding. We're deeply negative, and this indicates that traders are willing to pay a 7% premium to access physical silver today, 7% more to access physical silver today than they are to take delivery of silver a year later. So typically traders pay more for future delivery, right? It makes sense. You're gonna pay because you have to factor in the cost of storage and insurance and financing. So really what this is telling us is that there are deep problems structurally in the silver market. It's a foreign financial website. It's called Voodoo Bull. And they explain the ramifications of this. Quote, the situation is now completely reversed, indicating that investors holding paper certificates are seeking physical delivery at any cost. Market observers describe this behavioral pattern as a run on London's spot silver market, which will incentivize investors and users to continue selling paper contracts and instead demand the extraction of physical metal. So you've got all of these paper contracts floating around out there, and now people are saying, I don't want the paper, I want the silver. So this implies that there's a significant yield or a benefit holding silver relative to holding dollars. And this reflects a combination of factors: a lack of physical silver, and the difficulty in obtaining it, strong demand to be long silver via swaps or to borrow silver, and unusually expensive balance sheet sorting conditions. So when you combine all of these factors together and drop them into an environment where there simply isn't enough metal, you have a recipe for a rapidly increasing silver price. And that's exactly what we're seeing. It's also a recipe for volatility, which is why you're seeing these big swings in the price, because as metal flows from one place to another, people think, oh, we've solved the problem. Oh, wait, no, we haven't. So you get these sell-offs. So I think you can expect to see continued volatility in the silver market. Now, this current squeeze highlights another fundamental issue in the silver market that gets very little attention in the mainstream financial media. There's a lot more paper silver than actual metal. According to analyst Faisal Amin, and this was published by FX Street, the current paper to physical ratio stands near 356 to 1. In other words, for every ounce of physical silver that exists in the world, there are 356 paper ounces out there floating around. A lot more paper than actual metal. This is no different than a fractional reserve banking system, right? Where you have loans and you only have to have 10% of the reserves to back up all of the loans. So 90% of the bank's loans are actually unbacked. As long as everybody is content to keep their money in the bank, the system hums along nicely. But when people lose faith in the bank and they demand their dollars, they want their dollars in their hands, well, you end up with bank runs, right? Similarly, when people demand physical silver, the paper system collapses because there's not enough silver to go around to meet all of the paper demand that's out there. As Amin put it, quote, silver prices are not just reacting to demand. They are reacting to the realization that the market's underlying structure is no longer credible. And so this is another explanation for the volatility that's out there. Gold Antitrust Action Committee Director Chris Powell agrees. He said, only a short squeeze can plausibly explain the violent price action in silver today. He was talking about that on Friday when silver was leaping to above $80 an ounce. He said, quote, the squeeze is evident in the huge discrepancy between prices in Shanghai, India, London, and New York. Prices in Shanghai and India are far higher, creating an arbitrage opportunity that has been draining metal out of the West, metal that in many cases has multiple owners and isn't readily available. So there you go. We also have another factor that's going to play into this, the announcement of Chinese export restrictions that are set to go into effect in 2026 are going to add fuel to the fire. And under this policy, only large, licensed, state-approved companies with an annual silver production capacity of at least 80 tons and a credit line exceeding $30 million are going to be allowed to export silver. And according to analysts, the rules will lock hundreds of small and mid-sized exporters out of this system. And these smaller firms are key suppliers to industrial users and silver refiners around the world. So this is going to further squeeze those supplies. China controls around 60 to 70% of the world's refined silver supply. According to Amin, quote, this move mirrors China's earlier strategy with rare earth metals, where export controls were used to secure domestic industrial advantage and global pricing power. And as Amin notes, quote, there is no quick or scalable solution to silver's structural deficits. And he's absolutely right. I've talked about this before. Given the dynamics of silver mining, producers can't just quickly ramp up production, right? You might think, well, $80 silver, man, people must be just jonesing to mine silver. I'm sure they are, but it's not like you can just open a silver mine and start producing silver tomorrow. There's a long run up. So even at higher prices, it's going to take a while for the production to catch up, and it may not be able to, given what silver is available underground that's accessible, and this is true even at much higher prices. That means users are going to have to continue sourcing silver from above ground stocks to make up for the market deficits. However, people who hold silver are only going to let it go at much higher prices. And so this is exactly the dynamic that we see playing out today. In a way, it's just fundamental supply and demand, but then there's all of these technical layers sitting on top of it. But really, if you want to just get the gist of what I'm driving at here, there's not enough silver. That's really what you have to wrap your head around. There isn't enough silver to meet demand, not in reality and certainly not in the paper market. Now, silver is undoubtedly going to correct. It corrected yesterday. However, investors need to understand that the underlying fundamentals driving silver are almost certainly going to remain in place. It's like I said earlier in the show, you have to sit back and ask, what has changed? And if you can identify something fundamentally that has changed, then absolutely, it might be time to worry. But until you see those changes, until you understand that there's some underlying thing that has happened, you have to just kind of roll with the punches when we have these corrections. And here's the reality. The government can and will print more dollars. Nobody can print silver. And that is probably the most important thing you can remember when it comes to silver. So about those New Year's resolutions, I've got mine all ready to go. It's actually the same resolution that I made last year. I'm not making any resolutions. I don't do that. This strategy has worked really well for me over the years because by refusing to make resolutions, I've avoided the self-flagellation and the guilt that occurs when I inevitably break those promises to myself. Now, I know it's fun to make pronouncements about how we're going to do better in the coming year, but at my core, I'm a realist. And the odds are you're going to abandon your 2026 resolutions within weeks, if not days. Now, don't misunderstand me. I'm not questioning your intentions, just your willpower. And I don't mean to offend. I'm just stating the facts. I'm playing the odds, if you will. According to a study conducted by the University of Scranton, only 8% of people actually achieve their New Year's goals. Ever. In other words, more than 90% of the people who make New Year's resolutions fail. And so that's why I feel pretty safe playing the odds. Unless you're way out of the mainstream, your resolutions are basically already toast. And, your commitment to change isn't even going to last very long. On average, people break their New Year's resolutions by January 12th. Now, I didn't make this up. It's based on research by Strava, which is a social media network for athletes. And according to a New York Post story, and this is a few years old, but I'm sure it's pretty close, the company analyzed more than 31.5 million online global activities to come up with that date. Now, I have no idea how they did this. They didn't explain it. It sounds kind of science-y, and I've been told I must always trust the science, so I'm going to go with it. Look, I could go through the motions. I could commit to quitting eating donuts in 2026. It would be much better for my health. But here's the thing. I can declare I'm going donut-free next year. It ain't going to happen. I'm not, under any circumstances, going to quit eating donuts. I know it. You know it. Even the lady at Dunkin' knows it. Now, look, it's fair to say that it's probably not the best strategy for personal growth, right? If you're wanting to improve yourself, you may not want to listen to Mike right now. But then again, it does minimize disappointment. Life is better without disappointment, right? So maybe this is a personal growth plan. Serious, though. I'm not against making life changes. I'm really not. And I do like the fact that we have New Year's to kind of reset. I just don't think making a big pronouncement on December 31st is the best strategy for personal growth. I'm more of a take action now kind of guy. A friend of mine posted this yesterday, and I thought, that's really good. He said, a resolution is nothing but procrastination wrapped up in a tradition. Psychologists have actually studied resolutions, and they say that most people get too caught up in the moment and they set their expectations too high. And that drives them to commit to things they're never going to be able to realistically achieve. To put it simply, their dreams aren't realistically actionable. I'll give you an example. You might say something like, I'm never going to eat donuts again. You see, I have a donut fixation here. I'm actually kind of hungry too. So never going to eat donuts again. Or, maybe you'll promise yourself, I'm going to work out every single day in 2026. It's not going to happen, right? Psychology being what it is, most people are just going to throw in the towel after the first little setback. I bet you've experienced this yourself, right? You make a resolution, you slip up. You take a bite of the donut at the office, and then the next morning you're in the line at Dunkin'. Yes, donuts sort of thing for me. And you're going to hurt so bad the day after you go to the gym for the first time, you'll never want to go back. And then you miss a day or two, and you might feel guilty. You just call it quits for good. So the only person that really benefited from that was the gym membership that you bought that you're only going to use for 2 weeks. Here's the thing, though. Don't lose hope. Seriously, you can absolutely make your life measurably better in 2026. You can set some reasonable goals. You can take action from day one and achieve them. The key, according to experts, is incremental lifestyle changes, right? So instead of giving up donuts forever, maybe you could just cut back to 1 donut a week. Or, instead of promising yourself you're going to work out every single day, set a reasonable workout goal. I'm going to try to work out 3 times a week. Here's the thing. Changing your life is a process, not a pronouncement. So, I can't help you with your fitness or your eating goals. Not my thing. But I can offer some advice for improving your financial situation in the coming year. And who wouldn't want to improve their financial situation, right? I had ChatGPT kind of try to come up with the 5 most common New Year's resolutions, and saving more money and getting my finances in order is in the top 5, along with fitness, changing your diet, spending more time with family, I think were the other ones. But yeah, most people want to improve their financial life, and that's kind of in my wheelhouse, right? Invest in gold and silver. It's a great way to improve your financial system. If you're saving, you want to save in gold and silver. You don't want to save in dollars because they're devaluing them on purpose, right? I made a similar recommendation last year, and if you followed my advice, you're probably pretty happy right now, right? Now, you might be thinking, well, Mike, that's a great idea, but I really can't afford to buy an ounce of gold right now. It's $4,400 an ounce, and even silver is getting expensive. Well, Money Metals can help with that. Check out our monthly purchase plan. I'll link to it in the show notes page. simply put, you can set up a monthly payment that works within your budget and build your gold and silver holdings over time. You can get a subscription set up for as little as $100 a month. So you build your precious metals portfolio slowly over time. And as a bonus, when you're part of this program, you get access to lower premiums. So again, I'll link to this in the show notes page and you can check it out. But it's a great way to get your foot in the door and begin investing in precious metals. You know, that was one of the big stories in 2025 was when the chief investment officer over at Morgan Stanley recommended, instead of the traditional 60-40 portfolio with 60% equities and 40% bonds, he said we need to go to a 60-20-20 portfolio, getting rid of 20% of our bond holdings and shifting that into precious metals. So, you know, most investors don't have anywhere near 20% exposure to precious metals. In fact, a lot of investors have no exposure to precious metals at all, which seems ridiculous given the performance of both gold and silver over the last couple of years. So check that out. You know, it's basically a set it and forget it program. And even I can keep that resolution. So, you know, whether you're a resolution person or not, now is a great time to get your financial house in order, not because we're on the cusp of a new year, but because tomorrow's a new day and every day is a good day to make a positive change. So, you know, check it out. Again, I'll link to the monthly purchase plan on the show notes page. But the other thing that you can do is just give us a call. 800-800-1865. Talk to a money metals, precious metals specialist. These folks are fantastic and they can answer your questions. They can help you figure out how gold and silver can fit into your investment strategy. They can tell you about this program and a lot of other programs we have at Money Metals. Now, beware right now. Things are really, really busy, so there may be some wait times on the phones. And if you want to purchase gold or silver, you want to get some silver eagles or some gold bars, you can do that right online, and then you don't have to deal with the wait times on the phone and whatnot. But do it today because now's the time, right? Don't wait until next year on New Year's Day and say, man, I sure do wish that I had gotten some precious metals. Make the changes that you need to make today. So I hope you have a really, really nice New Year's Eve, a very, very happy New Year. And I'll see you guys next year, back on our regular time on Wednesday next week. And I will continue to endeavor in 2026 to bring you all of the news and analysis relating to precious metals that we've been doing here over the last couple of years. Again, thank you so much for listening to the show. It means a lot to me. This kind of wraps up my second year of doing this podcast, and I'm really, really pleased with how it's grown. So that's all a credit to you guys. Thank you so much. So with that, we're going to call it a wrap for this episode of the Money Metals Midweek Memo, the last one of 2025. You can get more information about all of the things that I've talked about on the show today and more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, make sure you sign up, get on our email list. Of course, you can subscribe to the Midweek Memo on your favorite podcasting platform. And when you do, you'll also be able to tune into our Market Wrap podcast, which airs every Friday, where you're going to get a quick overview of the week in precious metals, along with conversations between yours truly and other interesting people from the world of gold, silver, economics, and investing. Thanks again for listening. Please give us those likes, give us those positive reviews. I hope you have a fantastic rest of your week and a wonderful and blessed, happy new year.